Hey everyone, welcome to this week's market analysis webinar. It's been a little while since we've done some, even before the Christmas break, so welcome back and thank you very much for watching. It's going to be about 20 minutes and we're just going to run through the major asset classes that are covered by LCG. So that's forex, equity indices and commodities. And if you have any questions at any point, obviously please feel free to post them live or post comments on YouTube or whatever social media platform you happen to be watching this on, and we'll get back to you as soon as we can. Hope you read through the risk warning at this stage. Let's jump straight through to the trading platform. So here we are on the LCG trader platform, and so as I tend to do, let's start with the forex market and just the three major pairs: the euro dollar, dollar yen, and pound sterling against the US dollar. So this is the euros, the daily chart. So what I think is generally emerging here is that we pretty much tried to put a bottom in at 109. I've heard various descriptions of this, potentially a sort of cup and handle type formation, the cup, the handle, the break through the top. But I think this level through here, which is 111.60 pretty much, but I would say that now there's a bit of a zone around it because we had some false breaks above, going up as far as 112 and obviously up here, and then more recently to the downside we had that decent break above 112. We slid back through below 11.60, got as far down as 111, well 30 in essence, and now we've popped back up again. For me, this looks bullish at the moment. You know, we're positive on the MACD, on the daily chart. We've touched overbought territory. We haven't been below 50 properly for a while now in the RSI. And to me, it looks like this was an attempt to kind of rush people through that 111.60, flush out the weak hands, and now we're popping up higher again. So I think once we get today's candle could be key because it could be a close above that 111.60, and it could even potentially be a close above 112, both of which I think are a positive development. Means this little correction is over and that we're pushing further to the top side. If that is indeed the case, then that's quite major. As you can see from this longer term pattern, we've been downtrending for a while, and if this is in fact a bottom, minimum we've got to go and test 113, just shy of 114. Those highs that we reached back in June of last year. But really, if we were talking about reversing the trend, you know, that's getting a lot higher. But you know, first things first, I think at the moment it looks like potentially a bottoming pattern, but let's see what happens with this resistance level. If we are able to get through 112, you want to get as close as you can to 112, and basically it's game over again if we get back below 111.60. So they're roughly your levels to play with should we continue this positive move that we're seeing today. Of course, should that not all pan out, let's get back to the daily chart, then maybe we're just still in this sideways consolidation. And we roll back over towards 110 again. I don't think that's the case, but let's see. So confirming the idea of, obviously before we were talking about euro strength, now we're talking about dollar weakness, but obviously euro strength means dollar weakness in that context. Now we're talking about the yen, and we're talking about the yen falling against the yen. Obviously that's yen weakness versus the dollar after discussing it's yen strength against the dollar after just having discussed euro strength against the dollar. So you can see that the weak dollar is a kind of theme that's going on at the moment. Of course, it may not last, but at the moment, it looks like the dollar is breaking down quite materially. Here's 110. Everyone knows 110 is a big important level for dollar yen. 110 and 100 have been really big levels over the last few years. And we've not even managed to actually even get to 110. Every break above 1950 has come into some selling, and this was the previous high that I was kind of working with and expecting some selling from. I thought we might roll over straight away from here, but we kept coming back. Could have broken to the top side, but we didn't. We've rolled over to the downside, and you can see an RSI we've come down into oversold territory, so maybe not the optimum time to sell this second, but this is the first time in a while that we've been in like a downward trending environment according to momentum. Not since we were at the bottom of this huge trend over here, and this has been the correction higher, but it's stalled out below 110, and it looks like we're now rolling over to the downside again. So for me, it doesn't even look like we get back up to 109 again. And of course we could, somewhere before 109, and probably before this rising trend line, dollar yen rolls over further for more yen strength. Of course, at the moment, the yen's benefiting from this, from the geopolitical tensions in the Middle East, but it's not all down to that. There's just a few things going on that I write about in the articles, in terms of what the Bank of Japan are doing, what the Fed are doing, what the relative economic growth prospects are, fiscal stimulus, and etc., which would suggest to me that the yen is due a bit of strength. So now we're looking at the British pound. So again, it's one of the other major currencies gaining against the dollar. Obviously, this was the election. We got the spike up to 135, and then we rolled over, pretty much gave it all straight back the following week. This is actually a weekly chart. If I go down to the daily chart, you can see that we had quite a hefty... This was the kind of resistance we were working with, which was basically 133. We spiked up to 135 after the election. We said we might get up to 137, and it's taken a little longer for that to happen, but I still stand by that. I still think we probably are getting up to 137, but obviously 135 proved to be the key level. And so we rolled over from 135 right down to 130, gave up half a big handle in just a couple of days. But if you look at this, we're in an uptrend that's being challenged a bit. We had a big sell-off, but at the moment it's still a correction. For me, I think that we sold off from a big number. We came down to 130, dipped below it for a day, and then we were back above it again. So, and that was also the resistance from this little consolidation pattern here before the election. So I think we've done the correction now in sterling, and I think we're just trying to kind of wash out a bit some of the nervousness after that sell-off. We'll have to see what the developments are in Parliament, of course, but assuming that Brexit gets done, as they say, at the end of January, we think that gets rid of a lot of the uncertainty, and in an environment where the dollar seems to be weak, that's good for this pair, and we think we probably can just keep pushing higher from here. We've made a lower low and a lower high, so still the correction is taking place. But for me, if you look at, say that's done, we've had a little rally up, and if we even go down to the 4-hour chart, if we look at this recent, what is that, upside down now? What's going on? For some reason the levels on all this are a bit messed up. So no, maybe I was right the first time, but it was just unusual numbers. Bear with me. So good demonstration on how to fix your Fibonacci. So let's change it to 50. That was basically what I was after. Let's get 100 on there too. Get rid of 11. You can see that. Actually, I thought it was 50, but maybe it's. Anyway, you can see that we basically come down to the kind of key support zone on the short-term level here. And to me, it looks like we're done. We're done with this short-term correction. We're pushing higher, and that makes sense in terms of the general situation. We found a base at 130, and we're pushing on higher from here. All bets are off if we move back below 130. That's pretty bearish, and we've got to assume that this correction from 135 is going to be a bigger one. Switching gears to gold, this is what everyone's chatting about today. We had a massive gap higher open on the futures, and we're just shy of 1600. So pretty clear from the benefit of hindsight, but obviously I've had this line on my chart for a while now, which is just a pretty clear bull flag pattern. And even if you take the minimum, if you just assume that the bull flag started here when in actuality it kind of started down here, But you could talk about this as a little correction, maybe for this leg, a little correction here, then we project it up again. This is this is the longer term big potential up move. If we just demonstrate this for a sec, let's move to the weekly chart. What you would do with this line is project it up, and we're talking about huge upwards levels, talking about pushing into $1,800 an ounce. That would obviously be absolutely massive if that happened. It might take us a while to get there, barring some complete crisis, in which gold tends to do well. But what I was sort of getting to start with is that if we just take a more short-term horizon of assuming this last little leg, excuse me, is the main thing we're contending with. So from this low up to this peak, and then we produce a bit straighter, and then we project that from where gold prices broke out from this pattern. That takes us up to about 1640 per ounce, and so it would suggest that even though we've had several days of upside here, and I would say this is probably an exhaustion gap, and we're hugely overbought on the RSI, that we probably get a bit of a pullback from here, but I don't think it goes too far. 1550 is your first consideration, which is just those the 1560 to 1550 is basically this little support zone here. And if we had a move, if we zoom in a bit, if we just move to the top of that zone, we would partially fill the gap. If we move right to the bottom of the zone, we'd fill that. We'd fill that gap, and then I think that would probably be the catalyst to move on again from there. I don't think there'll be a bigger pullback. I think we've got more to go on this, but if we do, then again I think I'm remain bullish on it. 1520, which is actually it's kind of easier to see on the daily chart, is basically, if I draw in a trend line through these highs, you can see it a bit better. That's basically why 1520 is these peaks through here. Could pause at just that old resistance here at around 1537, but I think 50. If we do move further below the gap, probably there's a bit of profit taking, takes us down to 1520. But I think we can see more upside from there. So all good for gold. Just a matter of picking your levels really. But it looks like we could be in for a good start to the year for the precious metal, up to 1640 potentially, if this bull flag is to be believed. Brent crude oil, again, those Middle East tensions, prospect of lower crude out of Iraq, that's pushing oil prices higher. So $70 per barrel, that's obviously a major consideration. That's a big level. We've had a false breakout above this consolidation area once. There's the big move higher. We moved right back down to the bottom of the range at 56. And then we've rallied straight back up again. To me, this we're still in the range. We're still in a sideways range. And if we did sell off from that 70 high, we could, of course, move all the way back down again. And there are plenty of reasons out there to believe that might be the case. But I tend to think, in the bigger scheme of things, that we have had a big move up from gold. We tried to sell off, and actually, something along these lines, that basically we've ended this correction, gold moving back up to the top side, back up towards $87, $90 per barrel. Seems that way. Seems we kind of based out and we're pushing back to the top side. At the moment, these geopolitical tensions, I would imagine they're unlikely to last, and so that's not the long-term reason for oil strength. And if things do obviously subside a bit, that's why we could get a bit of a sell-off again from 70. That's already starting to happen a bit if you look at today's candle. But looking ahead to the rest of the year, production from the US could potentially slow a bit this year, because the price has remained quite low. These companies have struggled to make money. They're all paying quite high levels of interest. All these shale producers use junk bonds, paying high interest. especially relative to the generally low interest rates out there. It doesn't look like interest rates are going to go up in the US, but nonetheless, I think these companies are a bit squeezed. Production comes down. That's obviously less supply out there from the US, less supply from OPEC because they just cut further production in December. If this global economic rebound happens as people expect, then that's higher demand and lower supply, which should be good for oil. But let's see. 70, potentially a very interesting short-term level to sell off from, but I think overall we look good, we look bullish. This is the FTSE 100. We switch gears to indices now. Again, big election, pre-election gains, a little bit of a post-election gain, which we kind of gave up and we're still fuddling around with. But to me, this looks like fairly tight consolidation in here. After a big move up, I would assume that we get some follow through. The big investors out there aren't, I think, looking at the minutiae of Brexit. They're just looking at the fact that there's been a bit of the FTSE's been held back by political instability. That political instability is gone. Forget the details about a trade deal is difficult to negotiate for now. In terms of long-term investing in the UK, you're looking at good valuations at the moment, and I think people are going to be tempted in. As long as everything holds up globally in terms of equities, I think more people, more big global investors will be putting more money into the UK relative to how they have been on in the previous years, and that should allow the FTSE 100 to catch up a bit. But as it stands, we're in the short-term consolidation, and we need to clear out these previous peaks in order to really really zoom out to the upside. And obviously we've got record highs waiting for us if indeed that can happen. Now we've got the German DAX again. All these global indices, particularly the European ones, are consolidating a bit after that big run up at the end of last year. The DAX briefly fell below 13,000. That's the big level really at the moment. That's the big round number. We had 2 false breaks. Today makes 3 false breaks below her. If we could hold above 13,000 again today, that looks good for the DAX. And actually this is again is a bit of a kind of rally up, tight consolidation before potentially another rally. Flip side is, of course, if we do actually get a proper close below 13,000, maybe that's the excuse for a bit of a wobble at the start of the year in equities, which this stuff with Iran might just be the catalyst for. Wall Street, just shy of 29,000 in the Dow. Obviously, just still very close to record highs. We had this prolonged consolidation throughout 2000. We had the big rally up, the consolidation for several months, and we broke out that consolidation. To me, it's still very much an uptrend, but you do have to look at the fact that we've come out of overbought territory, and we're looking a bit like there's some negative divergence. So you can't dismiss the risks. You really here, all you can actually do is hope that these negative divergences cause a bit of a sell-off, and you can sell that if you're so inclined on a short-term basis. For me, it would more just be an opportunity to be able to buy into this uptrend at lower levels. But nothing too clear yet. We're just coming into the 20-day moving average. Is that 20? I'll double check. Yes, 20-day moving average. Okay, that's pretty much all. Thank you very much for watching, and good luck for trading for the rest of the week. Jasper signing out.